Hello friends, here we have some business transactions and these are the rules of debit and credit under English approach. And now I am going to explain you how to record these business transactions in the books of accounts by applying these rules of debit and credit. Our first transaction is commenced business by investing $50,000. To record this transaction in the books of accounts, first we are to identify the accounts affected by this transaction. And for that we have to see that due to this transaction what happened in the business. So let's see. Suppose this is our business and Mr. X is the owner. Mr. X is the owner of this business. And Mr. X started this business by investing $50,000. Now due to this transaction what happened in the business? Obviously in the business cash comes in, as Mr. X invested $50,000 in the business, so cash comes in the business. And who gave this money to the business? So Mr. X, the owner of the business, he gave this $50,000 to the business. So these are the accounts affected by this transaction. And after deciding the accounts, we are to identify their category. Now we know that cash is our asset and therefore cash belongs to real category, or we can say that cash is a real account and Mr. X is a personal account. And after deciding this category, now we are to decide that which account will be debited and which account will be credited, and for that we will refer these rules. So we know that cash is a real account, so the rule to record real account is debit what comes in, credit what goes out. And here cash comes in the business, so cash account will be debited because the rule says debit what comes in. Whatever item comes in the business, we are to debit that item, so cash account will be debited. And now Mr. X is a personal account, and the rule of personal account is that debit the receiver, credit the giver. And here Mr. X is the giver of the money, so personal account of Mr. X will be credited as per the rule, credit the giver. So we will credit Mr. X personal account. But in books of accounts, to represent Mr. X personal account, we will open capital account. So the final conclusion is that to record this transaction, cash account will be debited and capital account will be credited. Now let's see what journal entry we will record in the books of accounts. So first this is the format of journal. So first we will write date in the date column. Then after, first we will record the debit item. So as per the analysis, we know that cash account will be debited and capital account will be credited. So first we will record the debit item. And the amount of debit item we will record in the debit column, $50,000. After that we will record the credit item. In the next line, after leaving a little space, we will write the capital account. And the amount of credit item we will write in the credit column, $50,000. So this is the entry for transaction first. Now our second transaction is purchased goods for cash $10,000. So to record this transaction, let's see what happened in the business. So this is the business and we purchase goods in the business, so goods comes in the business and we paid money, so cash goes out from the business. And we know that goods and cash both are real account. And the rule to record real account is debit what comes in, credit what goes out. So due to this transaction, goods are coming in the business, so debit what comes in and cash goes out due to this transaction from the business, so cash account will be credited. Credit what goes out. So the final conclusion is that in this transaction goods account will be debited and cash account will be credited. But to represent goods account in the books of accounts in this transaction, we will consider purchase account. We will write purchase account. So to record this transaction, purchase account will be debited and cash account will be credited. So now let's see the journal entry. First we will record the date in the date column, January 5th. Then we will record the debit item, and we know the debit item is goods, but in place of goods we will write purchase account. Purchase account, and the amount is $10,000. And then we will record the credit item, and in this transaction the credit item is cash account, so we will write cash account, and the amount we will write in credit column. So this is the entry for the second transaction. Now our third transaction is sold goods for cash $15,000. Now let's see what happened in the business. As we sold the goods for cash $15,000, so we got money, we received money in the business. So cash comes in the business, and goods gone out from the business. And we know that cash and goods both are a real account, and the rule to record real account is debit what comes in, credit what goes out. So we received cash in the business, so debit what comes in, and goods gone out from the business, so credit what goes out. And the final conclusion is that to record this transaction in the books of accounts, cash account will be debited and goods account will be credited. But in place of goods account we will write sales account, as we are selling the goods, so we will write sales account in place of goods account. Now let's see the journal entry for this transaction in the journal. So first we will write date in the date column, January 10, and then we will record the debit item first, so cash account, and the amount we will write in the debit column, $15,000. After this we will write the credit item, and the credit item is sales account, and the amount we will write in the credit column, $15,000. So this is the entry for the third transaction. Now our next transaction is paid salary $5,000. Now let's see what happened in the business due to this transaction. This is our business, and as we paid salary, so obviously there is expense in the business, and the name of that expense is salary. And due to this transaction cash gone out from the business. So these are the two accounts affected in this transaction. Now the salary, we know that salary is expense, so it is a nominal account, and cash is a real account. And now the rule of nominal account says that debit all expenses and losses. So salary is expense, so we will debit this account as per the rule, debit all expenses and losses. And cash gone out, so the rule says, the rule of real account says that credit what goes out, so cash account will be credited. So the final conclusion is that to record this transaction in the books of accounts, salary account will be debited and cash account will be credited. Now let's see journal entry in the journal for this transaction. So first we will write date in the date column, January 15. Then we will write the debit item, and salary account will be debited, so we will write the salary account, and the amount is $5,000. Then we will record the credit item, and we know the credit item is the cash account, so we will record the cash account and amount we will write in the credit column, $5,000. So this is the entry for our fourth transaction. Now we have one more transaction conducted on January 20, and that is purchased furniture for cash $6,000. Now let's see what happened in the business. So this is our business, and as we purchased furniture for the business, so furniture came in the business as we purchased the furniture, and cash gone out from the business as we purchased furniture for cash, so we paid the money, so cash gone out from the business. Now furniture is our asset, so furniture is a real account and cash is also a real account. So furniture and cash both are real account. And now the rule of real account is debit what comes in, credit what goes out. And furniture is coming in the business due to this transaction, so we will debit the furniture account, and cash gone out from the business, so we will credit the cash account. So to record this transaction in the books of accounts, we will debit furniture account and we will credit the cash account. Now let's see the journal entry for this transaction in the journal. So first we will write date in the date column, January 20. Then we will record the debit item, furniture account, and the amount we will write in debit column. So we will write $6,000 in the debit column. After this we will record the credit item, and the credit item in this transaction is cash account. So we will write cash account, and the amount we will write in the credit column, $6,000. So this is the entry for our last transaction.